my window.
Hello, traders. Gary Wagner with the Gold Forecast here, approximately 9:30 a.m. in Honolulu, Hawaii, the 28th day of April, Thursday, and this is the Daily Report. Gold substantially higher, hitting a new high this morning, hitting a new high as we speak, currently trading at 1535.62, roughly in that area. It has been a phenomenal breakout. Yesterday, of course, we had a meeting with the Federal Reserve, the Office of the Federal Reserve, in which the non-statement, the indication that interest rates would remain low, that there was no announcement of the ending of QE2, in other words, printing more money. This was considered incredibly inflationary and incredibly bullish for the gold market. This, in fact, was a game changer as far as I'm concerned in terms of a non-statement making a tremendous statement in the market. And you can see the offshoot of that non-statement right here, this single candlestick on our daily gold chart. Now, here's what I am looking at, and here is what I believe. Of course, traders, you realize that I changed my mind fairly quickly. I was looking for somewhat of a correction right in this area. I did believe, and the reason that I looked at that was I simply looked at my count, 1, 2, 3, 4, and this was our fifth minor wave with this intermediate complex, and I thought we would probably see the market correct. We talked about types of corrections. The news came out, and it prompted me to issue a buy signal. Of course, we got in roughly $10 from here at about $15.25. We have our stops in place. We have some profits in the market. As I said, in terms of being a hybrid technician, which is what I consider myself, I look at fundamental news and issues to form a overall bias of the market. I then use technical strategies in terms of market timing. I'm bullish on the market, but when we enter and exit a particular trade, is typically based on technical indicators, and those technical indicators are Fibonacci, Elliott wave, and candlesticks. Now, we did see the market, in fact, retrace a little bit. I cannot really, as of yet, count this as another wave. I do believe this wave 5 is still fully intact. It's very difficult for me. It doesn't come to quite 23% in terms of a retracement. So I still believe that we are now in an extended minor wave 5. Now, what does that mean, and what are we looking for? Now, typically, you have a couple of golden rules that you have to follow in Elliott wave. One of them is that wave 3 can never be the shortest of any of the impulse waves. Well, it has lived that out because this line here is simply a copy and paste of the amplitude, meaning the distance that the marketplace itself went to in wave 1. Now, if wave 3 continues on higher, the logical extension is approximately 1.62% of wave 1. Now, that would put this particular move at about a $200 move if, in fact, we get that extension and the market does move to that degree. And in terms of where that might take us, let's do a little frontward projection. Now, in terms of a frontward projection, one of the easiest ways is simply, as you can see, I have now again cut and pasted this particular line. It is from here, and I want to now extend it roughly 1.61%. So this being our midpoint, this candle, simply what I'm going to do is to move this particular line over to the top of that candle. And now you can see in terms of a straight projection, if in fact this wave takes us 1.61%, what you'll see is that's going to take us roughly to 1575 to 1580 in terms of a revised upward target. Now, I did an interview, a video interview, which should go live either today or tomorrow for Kitco News, in which they asked me precisely that question, where I thought this rally might take us. Based upon these calculations that you're looking at right now, you can see where I derived my answer. Now, my answer was, simply put, I think that this market should take us to about 1575. And traders, you can see where this information came from. Now, in terms of the position that we have, obviously we want to maintain this long position, and we will maintain this stop. And I think that we should have a pretty good trade on our hands. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekend wrap-up and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange.